And here we go. The inauguration of One-on-One. I'm going to call it an inauguration because why not have a political theme for our guest, Mark Jones, chairman of the Mortgage Bankers Association, who just got back from the NBA delegation with the Republican National Convention, the RNC. And Mark, it's good to see you. Thank you for being with me on One-on-One.
It's absolutely fantastic to be here, especially on your inaugural show. I feel honored.
This is it, man. I had another show last week, and I changed the name. I scrapped it because I really want to just focus on folks and issues in the news. And man, you're both. You're someone in the news, and you are tackling some of the most important issues in the news to us. So let's just dive right in. I promise to keep this 15 minutes or less, so this can be one of the more hard-hitting podcasts out there. What was the experience like at the RNC?
It was incredible. It was one of the most incredible experiences I've had in my life. The walking was a pain in the ass because of all the extra security. So it was really tough getting in and out. But once you were in, just seeing that, I've never seen that in person before. Being there live and seeing all the parties coming together and all the speeches, it was great. I got really blessed. I've got a good friend who really runs the campaign for one of the primary leaders, and I got invited to a leadership dinner on the House side, and got some really good inside information on who the next the most likely leader of the Financial Services Committee on the House side. So really good stuff there.
And I know you're not going to tell us who the pick is. I think you're leaning in a certain direction, but just your overall feeling of the receptiveness of the Republican Party when it comes to housing. What was it like? What were some of the issues that you discussed?
Well, I can tell you that's the top three contenders, and one of them is actually my congressman, Bill Huizenga. The other two are Andy Barr, and the third is French Hill. One of the three of them are going to be the next Financial Services Committee chair, assuming that the Republicans take over. But as you know, I've always said to most of my audiences, the good news in our business is neither side is against housing. It's how they attack it. And the problem with the Republican side is they think the private markets, private capital markets are the answer to everything. And so our fight with them is always, what happened in 2008 gave everybody, a real cause to pause that the private market could take care of housing finance. And so we always need a strong Fannie, Freddie, and an ultimate government guarantee behind it to really keep our markets as steady as they need to be. And you kind of see that in some of the things they've changed. When Calabria was in there, he started taking away investor loans and things like that, putting a tax on your second home, your refinances. Democrats took that away, but that's really the fight we have on the Republican side, is to really realize the need for a Fannie Mae and a Freddie Mac, and to continue to tell them that after 2008, there's really no private market that can take the place of what we have.
Well, and Mark Calabria, who used to be the former director of the FHFA, has said that he believes that mortgage bankers should have more skin in the game, should be better capitalized. Your thoughts on a comment like that?
That's been said a lot out there. Mortgage bankers are very well capitalized for the risk we provide to the system. There's this thought that that somehow some of our bigger members are systemically important. And when you think about big banks, if one of them were to fail, you've got deposits, investment accounts, all kinds of things like that. If a large IMB fails, the only asset that the government has to deal with is their servicing portfolio, and that can be easily moved. Fannie Mae, Freddie Mac, Ginnie Mae can all pull that servicing in, move it out to somebody else. It would be disruptive to borrowers, but it wouldn't hurt the financial ecosystem like a big bank going down and runs on deposits and things like that. So the risk is really overblown. We don't see a whole lot of need for that. The other thing is, look at how many ways we are already regulated by the state, by Fannie Mae, Freddie Mac, Ginnie Mae, all the multi-state agencies. We are regulated and looked at so many different ways. The risk is really overblown from my perspective.
I really want to know who regulates Bob Brooksmith's wardrobe. Let's take a look at some of the pictures. Can you see my screen here?
I can see it. Yeah.
Look at this. So Who are the folks in this picture? You look very happy. You're obviously not far from the floor of the RNC.
We had a really nice suite up there, and ran into some really big names up there. I think on that day we actually got our picture taken with Newt Gingrich. He was up there. But go back to the prior one. You wanted names? I can give you.
Yeah, let's do it. I see Owen.
On your left is Owen Lee. He just was named as vice chairman starting this coming year. Then Bob Brooksmith, Laura Escobar, then myself. And then on my left is actually from the left end, that's George Rogers. He is the Republican Senate lobbyist. The gentleman next to him is Owen's son, who was there. He's just fresh out of college. And then the last person there, who is that? You know what? I'll get back to that.
Well, that's all right. We'll jump around because we've got look at some of these pictures. You've got Ben Carson in here.
Ben Carson was there. Yep, he was at a private event with us. Really, still very high in the Republican Party. I don't see him getting back into housing. I really don't. I think he's more likely an education secretary. I think that's where his heart lies.
Yep. And as we continue to look here,
that is Senator
Ron Johnson, Congressman Mark Wayne Mullen. You've got Mitch McConnell in here.
Yep.
And then lastly, Steve Scalise.
Yep, Leader Scalise. And that dinner I mentioned, he was at the dinner, and that was a really good dinner to really get some insight as to where the party was going.
Yep. All right. Yeah. So I know next up is going to be the Democratic National Convention, and you'll be heading there too, albeit amongst a change at the top of the ticket. Does the NBA care who's at the top of the ticket? I mean, there's not much you can do about it, right? And do you have any kind of sentiment?
Well, the top of the ticket's really not why we're there. The reason we're there, we focus on the Senate Banking Committee and the Financial Services Committee. That's where all of our work is done. And even to influence the CFPB, some other things, we still work through those primary agencies. And so who's on those committees, that's who we want to meet with. And when we were in Milwaukee, that's who we were meeting with. And when we're in Chicago, we will do the same thing. If we can touch every senator on Senate banking and every congressman who's on the Financial Services Committee, then we're in good shape.
I described your journey over the last 10 days or so as a magic carpet ride because you were able to help push through some important legislation regarding 203K program, very antiquated, being moved forward. And then, of course, you end up rubbing elbows with some prominent members of the Republican Party. Touch on the expansion of the 203K program, if you would.
Love to. Yeah, it's been a pretty special week. Absolutely. Thank you for recognizing that. One of my key issues when I took the chair was to really update the 203K program. There were two parts to it, and one of them didn't get done yet. The other one, we gained some ground, not as much as I'd like to see. So the 203K streamline program is a $35,000 rehab program that was originally rolled out in 1985. And the amount has not been changed since 1985. And to put this in perspective, back in 1985, the FHA maximum mortgage loan was $115,300. So it was roughly 30% of the max mortgage, which makes sense. You roll forward to today, and our max mortgage today is just under $500,000, $498 and change, and it was still $35,000. And so I was pushing to get at about the same percentage. 30% would be, 150, 160,000. We could do a lot of damage in the inner cities with that size of a 203K streamline because it's a much easier program. And when they first came out, Julia Gordon was trying to roll it out at $50,000, and I was like, that's it should be 125. So
yeah, not going to do it. You met sort of in the middle at 75.
75, exactly. So we're really excited about that. And the other piece I'd love to see them do is to roll it out to investors again, like they had back in the 80s. I think then you could get a lot of these inner city properties really ramped up, and it would start putting a dent in the supply side. So
Yeah,
yeah,
with any luck, that'll get some more inventory out on the market and get people feeling good about the idea of rehabbing. So obviously, we need the supply. Let's move on to some other hard hitting, important topics. Triggers. There is
yep.
some optimism now that that bill could get tucked in to the NDAA, the National Defense Authorization Act, which is a certainty annually to get passed. How are you
Yep.
feeling about that coming to fruition? What kind of chances would you give that?
I think it's better than 50-50, and I'll tell you why. First of all, it's bipartisan, and that's the beautiful thing. It is a bipartisan bill, and it's bicameral, and so that's going to give it. It's going to make it easier to tag it on to a moving vehicle. I know I was on a meeting this morning, and they said that this defense authorization bill is the last train leaving the station. So we're hopeful that we can get that done. And if your listeners don't know, we did a Mortgage Action Alliance call to action on the Senate side just this last week. So make sure if you've not done that, go out there, dig it up, because that's the last piece on the Senate side that we need to get it marked up and to get it tagged onto that bill. If it doesn't happen, there's an outside chance it could come through in a lame duck session, but more likely this is going to be pushed back to next year if we don't get it done. So let's get that mock call to action out there so we can have every shot at getting it done this year.
Yeah. So when will we know if it
We
gets
will
tucked into
know.
this bill?
We will know by the time they leave for the election season. By the I think it's the end of September.
Okay.
Yep.
All right. We'll track that. All right. CFPB. I want to jump to that topic because the director, Rohit Chopra, has been pleasantly out in front and talking. This is all we've ever asked for is for a little visibility into what they're thinking. First of all, I'm sure you appreciate that. And second of all, we're just starting to develop a relationship and understand what the CFPB is thinking. What is your level of confidence that under a Republican administration that would continue?
Well, first of all, I want to talk directly to what you mentioned about Chopra, and particularly talking about the credit report. We have been asking the CFPB to start looking into this for better part of a year, and he finally did it at our conference a few weeks ago, and we were really pleased to hear that. I had talked with Bob about it, and I said, do you think, as far as junk fees and him kind of categorizing these as junk fees, is that going to spread over into the other ones? And he said, don't count on it. So we're going to have to still fight the fight on what is and what is not a junk fee. The things they call junk fees, we call, appraisals and things like that. But in terms of a new administration, all you have to do is look back to when Kathy Kreninger was there and replaced Richard Cordray. It was a sea change. And it was like a pendulum swing all the way back the other way. So under that administration, what I'd love to see happen is for that whole thing to be changed to a panel like they have in some other agencies, where you've got 3 of the in party and 2 of the out party, so you don't have these massive swings back and forth. But that's a perfect world. More likely, we're going to get a more favorable and someone that's not going to really do enforcement by edict, regulation by enforcement was what I was trying to say. Regulation by enforcement or by blog post. And so, we'll see. But if history is our guide, it's going to be a change in our favor.
Yeah. In other words, regulating based on transgressions and bad actors, not looking for things or being politically motivated. I think reading between the lines.
What we've always asked for is
Yeah.
give us the rules. It's really hard to write rules and regulations and don't try and make blog posts and enforcement actions and have us read the tea leaves. Give us the rules. We've always been a business that is very good at rule following. Just want to know what they are.
All right, let's take off that chairman of the MBA hat and put on the president of one of the fastest growing IMBs in the country. That hat, Union Home Mortgage. Congratulations on all of your success.
Well, thank you, and I'd love to take credit for that, but that credit all goes to Bill Cosgrove and Al Blank. They are incredible in the way they are running Union, and I sold my company to them, and it was really cool to see the things that they were doing that I wasn't doing, and what really made a difference and how they're able to do what they're doing.
Yep.
Honestly, it starts with a really strong balance sheet and a great culture. and and it just grows from there. It allows them to recruit. They've been recruiting like crazy. I think we learned a lot with our merger with them, and so subsequent additions, it's gotten easier and easier. And
Yep.
yeah, we're growing like crazy.
Well, I believe you founded your company all the way back. Not going to date you, but 1983. You certainly have been in this game for a minute here. So along those lines, Mark, why don't I just ask you about the NAR settlement and your thoughts on a post-NAR settlement world, August 17th, 18th, right around the corner.
Yeah.
I've expressed concerns that it's going to affect the landscape in terms of referrals from the buyer's agents that just do the onesie twosies per year. Will they even be around by the end of next year? What are your thoughts and your level of concern?
So you and I had this discussion in a pre-call, and I've had a time to think about what you just said, because it diverged from my opinion, and I will share that with your listeners. I was around long enough to remember when buyer agency what came out, and everybody thought it was going to shock the world, and oh my gosh, this is going to change everything, and it turned out to be a complete nothing burger, a lot like Y2K. And at my chairman's conference this year, we had some NAR folks up there on the stage, and they even said that we think some of this is going to be a Y2K moment, because if you look in some of the markets with the higher price homes, you're already seeing commissions being negotiated down. I mean, my wife and I bought a home in Marco Island, Florida, and the broker started out at a much lower commission because the pricing is so much higher. And so after talking with you, though, I hadn't really thought about the onesie twosie, and you may be right. That's going to be an impact there. So the advice I would give to every loan officer that is listening to this is, if you're not already doing this, you need to call on listing agents, because if that's the case, guess who's going to control where the financing goes? It's going to be more and more the listing agent. I know great loan officers already call on the listing agent, but if you're not doing it, you're missing the boat, because they're going to be able to steer that traffic a lot better than they have been in the past, particularly those onesie twosie transactions.
Really have to commend the Mortgage Bankers Association for getting behind a new book, Princess Mackey Buys a House. I know that you are behind this effort as well. The motivation is to show folks, especially underserved communities, how they can buy a home and they can realize the American dream. The goal of the MBA is to sell 10,000 of these books. Give us a quick pitch and let everyone know how they can grab this book.
So Princess Mackey Buys a House, the MBA can provide you, if you want them branded and you want them in your markets, you can buy them in bulk. You can get them onesie twosie on Amazon, Princess Mackey Buys a House. And do we have time for the whole story, Greg?
You know what? It's important enough that we'll make the time. Let's go.
So, we were doing an outreach to our community to how we were going to do diversity and inclusion. And this realtor came up, the author of the book, and she pitched me this book and said, here's what we want to do. About the same time, I was entering the MBA leadership, and I went to a conference, and they talked about how the average African-American family started their home ownership journey a full decade behind the similarly situated white family. And so they lose that first doubling of compounding. And so when I heard about this book and tied it in with that, I thought, this is perfect. Instead of starting too late, let's start in the fourth grade, get that message in there, because getting the financial services message into children so that by the time they're 20 years old, they can start getting on that compounding train, it will make a difference. And so we got behind this book, and I'll tell you, it's taken off. Our 10,000 goal, we're at about 6,000. We had the author down to the IMB conference, and we did a read at a fifth grade classroom in New Orleans afterwards, and it went phenomenally well. And so if you want to do something like that, bring the author in. She will do anything for you. But to me, this is how we can really get after the financial literacy at an early enough age to close that gap. And that's what Princess Mackey is all about. So please help us out.
I think I might be sharing my screen. Can you see the book?
I don't see it.
You don't see the book. All right. Well, that's my bad. That's on me. We almost had a flawless session here. You know what? I'm just going to go out of my way to share it here. Here we go. So this is what the book looks like. You see that?
Princess Mackey Buys a House. Yeah. And again, if you want to get a bunch of them for a whole group of fourth graders or fifth graders, MBA has discounted prices. if you want to just buy a onesie twosie, Amazon's the best place to get it.
Excellent, excellent. Well, Mark Jones, really appreciate your time. The time is running here this year. Like, we are really flying through 2024. So it'll be interesting to see what the second half holds. Any kind of forecast? You think that rates are going to come down and things will improve? And what do you see ahead before we let you go in 25?
When I talk at some of the state associations, I stop in the middle of my talk and I say, so how's it feeling out there? And predominant feeling I'm getting right now is we're bouncing along the bottom and feeling a few green shoots here and there. And it's the first time I've heard that in about 2 years. And so I don't think we're going to have a rubber band snap back. I think it's going to be slow and plotty, but I do believe that. I think we're bouncing along the bottom, and I think things are going to start improving incrementally.
All right. Well, best of luck to you and all the folks at the NBA and Union, and look forward to keeping in touch with you. Mark Jones, thanks so much for your time.
Thanks, Greg, for having me.
All right. Loved having you on one-on-one. Also, next week, just a programming note, we will talk to Mary Clark Stevens, the wife of the late David Stevens. She will join me in an exclusive one-on-one interview. 6 months it has been since her husband passed away. She said the timing of my request was excellent, as they're going to be spreading the remainder of his ashes this weekend in a celebration of his life with about 55 close friends. And she looks forward to sharing how that goes and the journey since Dave's unfortunate passing. That is going to do it. Hope you have enjoyed the first one-on-one session. They'll be every Monday at 1 p.m. Eastern Time. Have a great week, everyone. We'll see you again soon.